So I'm going to run you through, I was actually, when I was talking to Max and he asked me to do this on Friday, on advance notice, he warned me that I shouldn't be overly complicated because there wasn't enough intellectual horsepower in the room to track. And I'm talking about capital markets, and I assure you that there's plenty of intellectual horsepower, so I'm not going to dumb it down. When I'm talking about market structure, and for those of you that really don't know me just by background, I'm trying to revolutionize investment banking by going into the void that's been lost for supporting emerging growth in middle market companies in this country. And I can show you exactly why that occurred. I'm known as the father of the Jobs Act, and you can Google that and see all sorts of interesting foibles about trying to fix capital markets in general that work better for entrepreneurs. And I'm also, as you know, former vice chairman of NASDAQ. I was there in New York, got to know Steve Jobs, and one of the things that I think is really kind of fun is that I actually jammed through one of the really important sort of company-saving financings when I was a young buck on an equity capital markets floor for Celgene. We were taking thalidomide out of mothballs, which was that drug that had created horrible birth defects, and putting it out under the protocol with Jerry Zeldis, who was the CMO there for years, and ultimately Revlimid, which is the standard of care now in treating multiple myeloma. So, you know, I'm a molecular geneticist by training. I actually started doing graduate work, and then, you know, just did not like it in my era, being up all night long doing one disc gel electrophoresis and wondering whether or not I contaminated the sample with DNase or RNase. And so sort of threw in the towel, went to Wall Street, and have been following my passion to help innovative companies ever since. So we oversaw 1,000 public equity offerings. I ran the listings business at NASDAQ. And the Jobs Act, if you don't know, created crowdfunding in securities, Regulation F, generally marketed private placements, Regulation 8+ IPOs, which are IPO light and emerging growth IPOs. We've now had something else that they refer to as Jobs Act 2.0, and we're working on a Jobs Act 3.0 because, as you can imagine, the wheels have grind very slowly in Congress trying to fix the mess that they've created, which we're going to talk about really quickly. So we lost the world's best small IPO ecosystem, and we absolutely crushed it by some of the changes we did in market structure, and it's one of the reasons why entrepreneurs in life sciences have had a harder time raising capital. So it raised the bar for companies to go public in this country, and we've been trying to, through policy changes in the House of Representatives, the U.S. Senate, to make changes that will hopefully make it progressively easier for companies to go public. And when you raise the bar going public, meaning what that means is instead of being able to do a $10 million IPO and getting it set up incredibly well, you have to do at least a $100 million IPO. And that means you have to have a much bigger company and a company which is further along. That means that when you go out and you go from a phase 1 to a phase 2 clinical and you have some success, you report the news, the stock doesn't necessarily react the way you would like it to, because there's no longer incentives for thousands and thousands, hundreds of thousands of retail brokers to get out on the phone and start telling their clients, hey, company XYZ had a great success. So what this does then is if you raise the bar, it actually shuts down the access to capital for smaller companies. Not just in life sciences, not just in Alzheimer's, but across the board, which is a great challenge for the future of this country. So this is a chart that we used in the House of Representatives, which actually led to the Jobs Act. But if you can look at 1998, you'll see here that there was an abrupt drop-off in the small IPO, which is the sub $50 million initial public offering, just collapsed. And what that was a conversion to electronic markets. It was causative. It wasn't picked up by people before us because it was in the height of the dot-com bubble. Lots of deals were getting done, but they didn't look under the covers and understand that small IPOs were going the way of the dodo bird. They used to represent 80% of all IPOs. Okay, so this has a catastrophic impact on financing life science. We went from 162 investment banks in 1994 that were doing at least one IPO to 128 that went out of business within 20 years. There's 31 left. This is our ecosystem that's there to provide investment banking services. Now, when I want to just connect the dots, this is the dark red here is a higher rate of starting companies in the United States, throughout the United States. Dark red, high, white, low. Okay, and you can see that in just 11 years there, 2006 to 2017, we've really dropped the rate at which we start companies across the board in the United States. Okay, that's in my mind, that's a kind of pathology in its own right. This is an updated version, which I got asked by the House of Representatives to update to 2018. But basically, what we're doing is indexing back to the time when we changed market structure and caused the drop off in small IPOs. This speaks to the number of listed companies on NASDAQ and the New York Stock Exchange. They did not know this in Congress or the SEC before we did this work back originally in 2008, I think it was. And the reason is that the stock exchanges were reporting their exchange-traded funds alongside their operating companies. They didn't pull the fund data out of the operating companies. So they had no idea. They were whistling right along, happy as Larry, not realizing that the number of operating companies in the United States was plummeting. And so you can see, and as one congressman said to me, Mr. Weild, which one is China in that chart? Sir, that's the one at the top. Mr. Weild, which one is the United States? Sir, we're the ones in the bottom. He said, Mr. Weild, which one would you prefer to be? Okay? So we want to change our future, and I'm a big believer in changing economic infrastructure. I see what InvestAcure is doing as important economic infrastructure. I'm going to walk you through, how that works. Two parts. One is fixing capital markets. One is InvestAcure as a platform to raise earlier stage capital on an enormous size. We said the lack of venture capital funding in Alzheimer's means the success of capital aggregation platforms like InvestAcure is a must-have. Okay, it's not a nice-to-have. It's maybe individually more important than any one life sciences company in its own right, because what this is going to do is it's going to get more capital into earlier stage projects throughout the industry. You can see, what happened sorry for I don't know what happened with the formatting, but you can see that if you look at phase 1, phase 2, and phase 3, there's been 0% success in phase 3 clinicals for Alzheimer's, and we all know that, and that's one of the reasons why large pharma basically pulled capital out. But you can see, as Max mentioned a minute ago, that things like oncology are being sort of well-funded, but people have become very risk-averse against Alzheimer's. But interestingly, already dementia in all of its, whether it's Alzheimer's, Lewy body dementia, CTE, FTD, all the different forms, it's already a massive cost to the economy and completely underfunded based on its size. And if you project out, this is just the Medicaid piece of it, right, going up to $770 million by 2050, it's going to end up being well over as much as $1.3 trillion in aggregate costs. It's going to crush the economy. We all know what the demographics are, right? Which is baby boomers are retiring, and the ratio of young people to support this mess compared to the older people that are going to have the disease is not high enough to support what we have coming. So the quality of care is going to collapse for older people if we do not find solutions. This is a slide that comes from the Alzheimer's Association, but it basically says that by 2025, we can start bending the cost curve by pushing the onset of Alzheimer's out 5 years. You can see what the cost savings are going to be. And I would submit that even that, which is a pretty substantial change in treatment compared to where we are today, is really not sufficient because the cost is still going to be extremely large. So we have to pull out all the stops and get, as Max says, more shots on goal. as many as we reasonably can. Otherwise, this thing's really gonna hurt the next generation. So, the potential for of InvestAcure to change the game, and we walked through this. The total venture investment in the U.S. companies with lead Alzheimer's disease programs from 2000 to 2008 to 2017, so 10 years, was only $741 million, which represents $74 million a year for Alzheimer's, an average of 9 Alzheimer's companies getting financed every year by the venture industry. If Max and this platform for InvestAcure gets a 2% penetration rate on the 70 million people in the Alzheimer's affinity group for this spare change investing, we'll aggregate that. It'll create $1 billion a year, which puts it on, which very quickly would increase the level of investment to 10 times current rates. That's a game changer. That's the kind of thing that really interests me. It's one of the reasons why I spend time down in Washington to fix the mess by changing the incentives and getting more money flowing into the right places. So if we do this here, and I'm going to ask everybody, if you've got friends and that you think are accredited investors, we're doing a 506c transaction, which, by the way, what we're doing today, telling you that we're doing a capital raise, I could not say that to you before we did the Jobs Act. Think about that as a game changer. So we got that passed in Washington. It's called the repeal of the prohibition against general solicitation. It means that I can actually speak to people in an audience, some of whom may not be accredited, and invite accredited investors to, and all of you, to refer your friends, to write the check so that we can change the game. Okay? People, refer them on in. We have a second part, and I just want you to understand sort of the theory here. We get more investment done, and we create we have venture exchange legislation in Washington right now, and what that is it's going to, we're going to create stock exchanges at some point if we get this passed, which are optimized to support smaller capitalization companies. So you make the early stage investments, you get the companies public earlier, you drive returns, you get interest back into the industry wholesale. I think that hopefully that makes sense to everybody. So this legislation got through the House 406 to 4. Okay, think about that. You can't even get a proclamation in support of motherhood and apple pie through the House of Representatives 406 to 4. Okay, so there's real appetite for this kind of legislation. It's heavily bipartisan. But what happened is it was supposed to get tagged on to the Senate Appropriations Bill in the last Congress. And what did President Trump do? He shut down the budget process to be able to get a wall. It pushed this legislation into the next Congress, which is that 5 minutes? Okay, doing better than I thought I would. Thank you. And it shut down. It moves the legislation by pushing it into the next Congress. So we have to start again. But I'm pretty sure that if we get back at it, there'll be a real appetite, and we'll get that done. So InvestAcure is a platform aggregating dollars. If it grows $1 billion, coming in with a steady stream of improvements to capital markets to lower the barrier to get companies public, to drive returns, we could really fix this problem, at least from a capital standpoint. And that's what the objective is. So if you have an interest in reaching out to me, I'm on LinkedIn. It's a pretty rare spelling of the name, Weild. And you can't read it there, I apologize, but it's david.weild at weildco.com. You can reach out to me directly. And if there are any questions, I got a couple of minutes, all right? We're going to have a panel afterwards? Okay, terrific. Thank you.